global fight against inflation has seen a rapid increase in interest rates as the hawkish stance by central bankers is believed to be the immediate remedy to tame the uptick. However, analysts believe these recent increases in real rates are likely to be temporary. Hello and welcome to this episode of Focus On, where we'll be looking critically at the impact of inflation and other macroeconomic headwinds on Nigeria's economic growth. I'm Akin Obakeye. Rising inflation has been the worry facing central banks and policymakers globally. The economic impact of the conflict raging in Ukraine, including the attendant sharp rise in energy and food prices, has also contributed to the global challenge. Nigeria is not immune to these downside risks as growth projections by the International Monetary Fund is put at 3.2% in 2023. This is in line with expectations by FBNQuest.
We have a growth projection of 3.2%, and that's still low single-digit range, right? What we've seen is that monetary policy has been tight, so that might have an impact on GDP growth, impact in terms of on the negative side. So we might see GDP growth going lower than that. In fact, the CBN itself has a GDP forecast of about 3.01%. So that's 20 basis points below what we forecast for the year. And I'm sure they're taking into consideration the impact of the tight monetary policy environment. So that's likely to, affect growth downwards. For inflation, we have a projection of 18.6% by the end of the year. But as you rightly said, if the subsidies are completely eliminated by June, as the government has proposed, then we might see a downside risk to inflation, and inflation would move higher than what we forecasted. So what is clear is that this year inflation is going to be in double digits.
So let's look at some key fundamentals in the 2023 outlook by FBNQuest. Quite some issues being raised, looking at all sector projected growth. We're looking at the contribution of agri sector. Any dynamics at play in terms of in the next couple of quarters to come? Any dynamics? Do you see anything drastic that might either hinder, in terms of policies, that might either hinder the growth of these sectors or also lead to maybe a slowdown in growth?
In terms of policies, not exactly. I can't think of anyone on top of my head right now. But just in terms of the market dynamics, for the oil sector, for instance, what is clear this year is that prices will not be supportive, right? So we're seeing prices at $75 per barrel for Brent crude. I mean, last year prices were as high as $105 per barrel. So that will not be supportive. So just market dynamics at play. On the other side, we're seeing production increasing from about 0.9 million barrels per day that it was around November, I think, to about 1.3 million barrels per day in February. Yes, it was February. So production is improving. That's good news for Nigeria. But on the other hand, prices aren't as supportive as they were.
Efforts are being made by the government to increase revenue. We know of the ways and means. We know of what our current debt stock is right now, and it's not a matter of debt to GDP; it's a matter of debt to revenue. That's a major issue. So, what strategies do you think needs to be adopted to, first of all, increase revenue, to even meet our servicing our debt cost, basically?
Okay, so one of the things that the government can do, it's been much talked about really, is this removal of fuel subsidies. So a situation where you spend 7 trillion out of your 20 trillion budget on fuel subsidies is not sustainable. So that would, just completely eliminating fuel subsidies will free up some revenues and will expand the fiscal space for the government. That is one aspect of it. The second aspect is that, if government decides to harmonize the exchange rate, right, and the exchange rate actually is higher, then the translation effect from, all revenues in dollars to naira will automatically boost revenue in naira terms. So that automatically will boost government revenue as well. So those two things are things that government can do. In addition to that, government has to find creative ways to increase revenues. Expanding the tax net is one. I believe that the government has been lazy, taxing the existing tax base. So we have to just do more than taxing existing tax base. We have to expand the tax net. We have to make sure that leakages are plugged. We have to make sure that the size of government is pruned and wastages in governments are actually reduced to the barest minimum.
No doubt, the financial system has been tested by higher inflation and interest rates. But how does it all reflect in market activities?
The MPC has its target, and its target is to rein in inflation. Um, our view is for as long as you see inflation being a challenge, we think the MPC would retain its hawkish stance. The degree in which it raises interest rates or its MPR, is questionable, or you can debate that. But if you have, raging inflation, you always have that sort of positioning by, policymakers.
Right. And at what point are we going to see an impact on the markets, a negative impact on the markets, basically?
And the truth is, where the rates are, for some time has kept a huge amount of funds on the sidelines, from the equities market. So, it's very understandable, for investors positioning in, less riskier, relatively higher yielding opportunities. But from an equity perspective, our view is there are opportunities that still present themselves.
Right. So based on the stocks that FBNQuest has been or tracks, basically, what are the key stocks so far, and which ones should we watch out for going forward?
Yeah, at the beginning of the year, we liked MTN Nigeria. We still like it. You can see it's doing, better than the market. But you also have to take into cognizance that MTN published its result quite early. The market has digested it and has had an opportunity to know, where MTN is going. So for us, we still like MTN. We like data business. We like other segments like mobile money. We like Fintech. Besides MTN, we are very bullish on Lafarge Africa. Price increases taken in Q4, we've seen the outcome on its Q4 numbers, and management remains confident, of its prospects this year. I think the main challenge that we see for Lafarge in particular is the impact of FX payables on its P&L. Once it's able to resolve that issue, they pretty don't have any real headwind in our view that could challenge, growth, our expectations for growth. Besides Lafarge, we like Okomo Oil. Like we said in our report, Okomo Oil is really in the second stage of an expansive growth, because of its extension to fully matured, and expected to fruit properly this year. So that should provide a significant boost to revenues this year.
Right. Let me take you back a bit to what your comment about MTN and how investors have actually digested MTN numbers. But let's look at the AGM. And one of the things that will be proposed at the AGM is a merger of the Momo PSB and the Yellow Digital Financial Services. We're looking at the merger of that. Do you think that would have any boost, any positive insights?
I think talking of a merger for very young businesses within a large company like MTN at this stage might not be the best way to extract value from the companies. In our view, we think allow both segments to grow as they are and see where they get to in maybe 2 or 3 years before we talk about merging the businesses.
With the volatile environment, investors' position will be more cautious, but navigating the shallow market efficiently is dependent on getting the right advisory.
So there's a lot of optimism about Nigeria's macroeconomic situation. There are a number of government reforms which are being expected this year and beyond. We've positioned ourselves to offer a diversified offering to both our retail and institutional clients. Within the merchant bank, we offer the broad suite of corporate banking services and treasury services to our customers. So we create credits, we offer letters of credit and international trade finance support. Also, very importantly, within the merchant bank, we have one of the leading investment banks that advises clients whether it's a merger and acquisition transaction, a project finance, and infrastructure is a very big thing in Nigeria. We expect going forward, given the deficits. We're very well positioned, and we have specialists in this area and also in raising debts, both at the short end side of the market and the long end side of the market. So I'm sure you've heard about commercial papers, for instance, and bonds. We advise our clients to access such funding. In the merchant bank, we give direct facilities, both short-term and long-term. We support our clients with working capital and also their capital expenditure requirements, which is a bit more long-term in nature. And for the importers, we help through our offshore correspondent banks pay for goods and services being imported into Nigeria.
Once upon a time, we didn't have so much of private sector, private firms here in Nigeria go into the CP space and all that to raise capital. You had multinationals do that, but now you're seeing mid-cap companies coming up to do that. What exactly changed the narrative from the point of view of FBNQuest? What exactly have these investors seen differently that they've decided to say, let's venture into this? And what advices have the likes of FBNQuest given to this client to see that this is actually the next big thing?
Thank you. And that's a very good question. So to my mind, it's testament to the fact that we've built companies over the years. The country as a whole now has companies with very strong fundamentals and good credit rating. So the companies on their own, not only are they running very solid businesses, growth businesses, but the investor community now recognizes directly the credit worthiness of these businesses. To access the commercial paper market or the bond market, you need to have a certain a certain credit rating. So these institutions have been rated. Some of them are investment grade and above, and there's direct appetite from the investor community to buy the instruments being issued by these companies.
All right. Also, I'd want to ask if FBNQuest is also looking at the tech ecosystem startups and also seeing how they can actually boost in terms of their portfolio towards that. Is there any move towards that?
Fintech is one of the fastest growing sectors, not just in Nigeria, but globally. It enables business. It's very scalable. It's one that that ecosystem is one we interact with, in a number of areas. They're partners to us in terms of even enabling our processes and our technology. And as clients, we offer certain services, advisory, financing services to them. And also one of our subsidiaries, FBNQuest Funds, is an investor in a number of fintech businesses.
In the near term, while vulnerabilities remain high, key policies are needed to navigate through the shocks for sustained economic growth. Well, that's all we can take on this episode of Focus On. I'm Aki Obake. Thanks for watching.